After a lackluster performance in FY23, the mid and small cap segments are staging an impressive turnaround in FY24. The two pockets are up 9% and 10% respectively so far in FY24, as against a 5% increase in the Nifty 50. Market experts attribute this outperformance to the valuation comfort that has come after a time-wise and price-wise correction, with the Nifty Small Cap 100 and Mid Cap 100 indices trading below their 5-year average multiples.
The mid and the small cap segment, very deservedly so, in the last 1.5 months has kind of outperformed the broader markets. And I think I can pinpoint two basic reasons for that. One is obviously valuations, which have become at a discount to the large caps as compared to the premium that they were trading at. And the second thing is the fall in inflation, especially the WPI inflation, which should ideally lead to the interest rate hike cycle coming to an end and optically should lead to a margin expansion, very significant margin expansion in the months to come.
G. Jokalingam of Economics Research is particularly bullish on small caps as he sees more room left in their recovery. Market recovery has boosted retail investors' optimism. Mid-small caps are their preferred segments and should do well going ahead. Small caps can rally 10 to 15% in next 6 months, 5 to 8% rally seen in mid-caps Sensex. G. Jokalingam, founder and head of research, Economics Research and Advisory, says. Individually, some mid and small cap stocks have even doubled investors' money since April this year. The strength in the two pockets is expected to sustain ahead as ease in input costs and peaking of interest rates will likely lift their earnings over the next few quarters.
So I think from a near to medium term perspective, the outlook from an earning growth perspective is very, very strong and very, very bright. And I would expect the Indian equity markets, especially the small and the mid cap segment, to be on a consistent bull run from here onwards. Now, as far as investment strategy is concerned, that kind of remains absolutely unchanged, which is to invest in quality stocks and hold them from a long-term perspective. Be very careful about what you're choosing and focus very hard on earnings growth.
That said, while fundamental outlook is firm, technical charts suggest some consolidation in the indices is likely following the sharp run.
Statically, midcap has been in a strong uptrend over the last few weeks and continuously without showing any reasonable correction. This sector has moved up from 29,500 to almost 32,500, 32,700 levels. Overall chart pattern is looking positive, but the mid-cap sector is placing around the strong resistance area of around 33,000 levels. And having moved up swiftly from the lower levels, I'm expecting consolidation or chances of a cooling off of a current uptrend around 33,000 levels in the near term. If you look at small cap sector has also been a continuous uptrend over the last couple of months. It has moved up from the lows of around 8,600, 8,700 levels. It has almost reached the 9,800 levels in this week. So overall chart pattern is still looking positive for the small cap sector, currently placed at the hurdle of around 10,000 levels. There is a possibility of consolidation moment. In case if it breaks above 10,000 levels, there is this sector could reach out to the next overhead resistance of around 11,000 levels.
That said, though the mid and small cap segments are likely to do well going ahead, experts suggest being selective in stock picking. Today on May 15, Dalal Street will react to consumer inflation print for April and the Karnataka election results. Stock-specific action will also continue amid the Q4 earnings season.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.